Apple shares getting slammed again today, posting its biggest two-day loss the company is in 5 years. For more on that, let's get to Dom Chu back at headquarters. Hey, Dom.
Well, Scott, it's still the biggest company out there, but it's gotten smaller, and it's worth less than $1 trillion at this point. Apple had been one of the standout outperformers in the recent market turmoil, holding up relatively well compared to other tech and communication services stocks. But that narrative changed pretty quickly on the heels of its earnings report last week, which was generally positive, but for concerns about its current quarter forecast and its big decision to stop quarterly updates on unit sales figures for the iPhone, the iPad, and Mac computers. Now, the negative sentiment as of late has translated into a loss of roughly $122 billion in market value just since the end of September. As the biggest publicly traded company out there, Apple has a lot of influence over market cap weighted indices for obvious reasons, like the S&P 500, like the NASDAQ Composite, and of course, the large cap NASDAQ 100. And that means if you are invested in mutual funds or exchange traded funds tied to those indices, you might have a ton of exposure. For example, the SPDR S&P 500 ETF, that ticker SPY, a 4% weighting in line with the underlying index. Inline also means it's a 12% weighting of the Invesco QQQ, which tracks the NASDAQ 100. In the past, Apple dips have been ones worth buying, as evidenced by its march to be the biggest publicly traded company out there. But will a perception of slowing smartphone sales, perhaps less transparency around financial reporting, cloud things this time around, Scott? And that's going to be a big part of the story. Back over to you.
Dom, thanks very much. Let's trade it. What in the world is going on with this name? I mean, it gets below $200. Is it a golden opportunity or not?
I mean, for a trade, maybe, but the problem is you don't have any visibility into it anymore. That's going to keep a certain type of investor out of it. I still think you're kind of making the same bet in that, do you believe that Apple's going to be able to outperform and out-execute anybody else? But again, maybe it's slowing. Maybe this is another part of it, and the entire ecosystem is slowing. I'm as concerned as you about the idea that tech is underperforming. I just think it's going to be very difficult to have the leader of the market underperform and still have a good stock.
But of all the companies that have, they didn't drop a donut. In fact, their numbers were pretty good. The growth, I think, remains intact. But so back to, of all the companies that actually disappointed in some way, Apple's disappointment to me is company related. It's not secular. I know they talked about weaker emerging markets. I know they talked about a $2 billion FX headwind. But it's really about this guidance. It's about a corporate governance hit, if you ask me, for a company that was as impeccable as they came. So I think this is an opportunity for
the corporate guidance issue.
Well, the corporate governance issue. Governance issue is a transparency issue. I'm not saying that there's rampant issues. I'm telling you, this is a company that was given a premium multiple, and again, relative to itself, based upon the quality of this management team, their ability to communicate, their ability to understand their business, and their ability to essentially give investors confidence. That has been shaken. And I think, Scott, to your question, I think people that want to own Apple here are going to be paid off, but I don't think that in the short run that is overcome quickly.
Golden opportunity or not, Karen, for this
Golden
stock?
Apple? Okay, I got it. I'm long it. It hasn't felt so golden recently. However, the valuation is not crazy at all. I really continue to believe in the evolution from the hardware company to a mix of more hardware software with hardware services, rather, with that higher multiple that would go along with it. I don't think it's a corporate governance issue. I think it was really telegraphed terribly. They did a terrible job.
The company doesn't want to tell you about their core business, the most important part of their business. You think that's not something that they should be given a ding for in terms of transparency and insight?
I think that the street, well, we've seen other companies change the metrics that they give the street, and it takes some time, and analysts get used to it. I think the way they announced it was terrible. I think they should have announced it somewhere down the road. We're going to do this. I think they did it right in the middle of a call instead of, it should have been front and center.
Part of the issue is
that was disappointing, but ultimately the numbers are going to be what the numbers are going to be, and this will be in the rearview mirror in 6 months.
But beyond the way they announced it, the fact that they announced it at all leads people to wonder whether things are bad, right? They wouldn't do this if everything was great.
That's why I say if the numbers are good, then we'll feel like, all right, that wasn't why they announced it. But people are panicked now because it doesn't feel great. We'll see in 6 months whether it's okay.
All right. Guy, you think this could be the perfect time to buy Apple? So
why
don't you head on over to the plasma?
Something here on this
Give us your fast
called
pitch.
The Power Pitch. Are you familiar with the power pitch?
I am.
Called a
That's what a
Well, the
trader
fast
from the,
pitch.
that's what a trader
I know
from
that
the desk
apparently you're
walks
not as
over
familiar
to
as I am.
the smart board and pitches the stock. So, you know what? Why not? I've been away for a few days. Apple sold off. So why don't we pitch Apple? Why buy Apple, you ask? I'm glad you asked. And, you know, we just talked about this. It's like Dom saw my notes. Tim said it as well. Number one, slowing growth doesn't mean no growth. Yes, growth slowed, but you still have significant growth there. It's not like it went away entirely. Number two, wearables and healthcare pipeline. I will tell you, I think the upside, the optionality, if Apple gets it right on the healthcare wearable front, is tremendous. Some people talk about it. I don't think it's at all priced into the stock. If they figure it out, I think it absolutely changes the calculus on their multiple. And we've seen this movie before. I mean, let's just show a chart, and I'll show you what I'm talking about. Why have we seen this movie before? Well, just look over the last few years. You have seen downdrafts in the stock of this magnitude a number of times, and each time the stock is recovered. Why? It's always different. It always feels bad, but they always figure it out. Yes, to Karen's point, I think their communication on no longer giving numbers was terrible, but the market will look past that. And maybe in their mind, they're saying, we want to get away from the hardware multiple and we want to get into a services multiple, and this is how we do it, by ripping the Band-Aid off.
Guy, I have a question for you. Let's talk about services revenue. Were you disappointed by 17%? That seemed to be where the momentum in the stock really was going, and maybe we're getting ahead of ourselves.
Yeah, I think people, clearly the market wants to see that number closer to 20, 21%. I get it. It doesn't happen in a straight line, so the growth has absolutely slowed. But trajectory is still correct. So I understand why people are taking a pause here. I understand why the stock sold off. Quite frankly, a few months ago, you know, we did the calculus and said with a market multiple, given their earnings next year, Apple's worth $241 a share. I think it got up to $234. We also said the potential downside on a broader market sell-off is $185. Here we are at $200. So this is not an exact science. But again, I think the market has provided you, and I hate using the word, I rarely do, with an opportunity to buy this stock yet again.
Okay. Thank you for the pitch. Find out if we're buying it now. Timmy?
Yeah, we are buying it. I think this is a great call. I think this is an oversold moment. I don't know when it's going to turn, but I like the fundamentals in this company.
What is that picture?
Who is that in the picture?
That's Guy Adami, everybody. I mean, that's,
of course.
Yeah, zoom in.
He's wearing a purple shirt.
He's wearing a purple shirt. It's not terrible. It's not my best,
All right.
but it's not terrible.
I thought it was like Count Dracula.
If the shoe
Karen?
fits.
Yes, I agree. I have Apple as a buy here. It's been a little rocky, I admit, but down the road, I think we'll still continue to see growth. I agree with Keith.
BK?
Yeah, I'm going to say buy it, but it's more of a trade for me. This market to me is a very tactical market. So against the 200-day
All right, so where are you going to get out
average,
then, Mr. Trader?
Where
You're
am I
going to buy it
get
here,
out?
and then what are
Yeah.
you going to do?
I don't know. I'll get out at maybe 220, 10% higher. How's that sound?
He's also
it's gonna
playing
hit
like
a
a trade it or fade it kind of a thing. I see what you're doing, Brian.
You see what I
I
did?
understand.
Trade it, don't fade it. Right,
On our
exactly.
show, we actually use trade it as a term that means buy it.
Right.
You know,
I'm
even
just trying to play by the rules of the game, right?
That's confusing.
That's what BK does. Trade it, don't fade it.
It says everything about where Apple is sentiment-wise. You got to do a fast pitch on Apple of all stocks that are out there, right? Have you ever done a fast pitch on this name before?
Yeah, is that directed at me?
Yeah, looking right at you.
At this stock.
I'm looking right at you.
Pete Najarian has pitched this name a number of times, correctly, I might add, and I'm certain Karen, Tim, or BK at some point has as well. But with that said, this is my maiden fast pitch voyage in terms of Apple.